Chapter 12, Part 2, Fiscal Policy. Now, one of the things that Uncle Sam does to justify Congress's existence is to tax us. So, let's talk about taxes, shall we? Taxes are a form of income redistribution. Now, I am not getting into the politics or ideology behind whether or taxes are good or bad. This is not political science, this is economics. However, income redistribution is just what it says. Taking money from someone and giving it to someone else. When it is done voluntarily, it's called charity. The Salvation Army, United Way, all of these participate in and actually rely on income redistribution. Bill Gates gave UW a new computer lab several years ago, and he also gave $20 million to the Seattle libraries. He fitted out Harvard with a new computer lab. These are all voluntary donations. The trick comes when the government gets involved. The government gets involved in income redistribution mostly through taxes, and the most widely known tax is the income tax. Depending on how much you make, you pay a percentage of those earnings to help support the operation of the government. There are also sales taxes, excise or luxury taxes, customs duties, property taxes, capital gains taxes, as well as user fees and licenses, which are different names, but they're also a tax. Unlike donations, taxes are not voluntary. If you do not pay your taxes, you get to go to jail. If you have questions about the income redistribution, ask the questions in the forum. There are some concerns in the tax realm. First concern is efficiency. Is the collection of the tax worth it? A sales tax is a very efficient tax because it's very easy to collect. You don't leave the store unless you pay the sales tax. On the other hand, when taxes are difficult to collect and taxpayers work hard to evade the tax, that is not really an efficient tax. The sales tax in California. Some people evade it by coming up to Oregon to buy stuff without paying 10% sales tax in California. It's not very efficient tax in Siskiyou County, in Vancouver, Washington, or over by Boise. But if you live in sunny San Diego, you're not going to schlep all the way here to the Beaver State to save on grocery taxes. Then there's equity. Is the tax fair for everybody involved at all income levels involved? This is unfortunately a very subjective measure and depends greatly on the perception of the tax. There are three types of tax systems. There's the progressive, regressive, and proportional. And in this case, progressive does not have, again, it does not have any connection with the politics of it. A progressive tax is one where the percentage of tax burden increases as the income increases. We're talking about percentage of tax burden. So somebody making $25,000 would pay this much of their income in the tax. And somebody making $250,000 would pay that much of their income as a tax. So that's what we mean by percentage of tax burden. Then there is a regressive tax. A regressive tax is where the percentage of tax burden decreases as a person's income increases. A sales tax, even though it is a set percentage, hits the lower incomes harder because they are paying a larger percentage of their income to service the tax. This is not a flat tax. Even though the sales tax is a set number, this is not a flat tax in economics terms. A flat tax would be more appropriately called a proportional tax. A proportional tax is where, regardless of your income, you pay a certain percent of that income. So, if you make $25,000, you pay the same percentage, you have the same percentage of tax burden as somebody who's making $250,000. This is an idea that has been widely known as a flat tax. There have also been some refinements of the flat tax. One politician, Steve Forbes, who ran in 1992 on the Republican side, said that he would exempt the first $36,000 tax-free. At the time, it would have benefited about 50-60% of the lowest earners in the nation. Looking at it this way, the first $36,000 is not taxed. So if you make $33,000, you pay zero federal tax. If you make $50,000, the first $36,000 is not taxed, so you're going to be taxed on the $14,000. The reason that they call it a flat tax is because whatever that number minus $36,000, you pay 17% on $14,000. If you're a millionaire, you get the first $36,000 free, and then you pay 17% on whatever is left over. This is seen as a more fair tax bracket because it's seen as everybody paying a fairer share. If you have questions about progressive, regressive, and proportional flat taxes, ask them in the forums. Please ask them in the forums. Government transfers. This is where individuals receive money or goods from the government. The recipient does not directly pay for these goods as such because any money that the government spends has to come from the taxpayers. So, direct transfers where people get actual cash money. In-kind transfers are the food stamps, are the Women, Infants, Children's, the TANF program. Unemployment insurance is a direct cash payment. Income redistribution does not necessarily always go from the rich to the poor. There are subsidies for museums, for the arts, for municipal stadiums. These places don't get food stamps. They get considerations with tax cuts, rate cuts on utilities, all sorts of different financial incentives that they keep the money rather than spending the money for a certain amount of time. Then they have to go and start paying that money. Some people say that this type of income redistribution sounds like these transfers are taking food out of the poor people's mouths just so that we can build another skybox at Raider Stadium. That's not the way it is. It does not take directly from anyone. It reduces the amount that is available to everyone. So think of it as dipping a bucket out of the swimming pool. There's a little less to go around for everybody, but when you have so many buckets dipping into the swimming pool for so many different projects, it can make a difference. And the difference it makes is where liberals and conservatives differ. Now, what I'd like you not to worry about is the debt pyramid, don't worry about the fiscal years, and don't worry about monetizing the deficit. The one thing that I do want to emphasize that is inflation is a tax on the poor and the thrifty because it reduces the buying power of their dollars. You've heard the statement, a penny saved is a penny earned, unless you've saved that penny so long that the buying power of that penny is reduced significantly over time.